Hello, everybody. Welcome to Monday. The S&P 500 was up 0.8% today. Fantastic day. NASDAQ was up 1.9%. Getting questions about why the market's doing so well in this environment where there's so many negative things happening. We had a couple weeks ago, we had 2 weeks of just fantastic uprun, had a big dip last week, but Friday turned around and came up. Today's a nice follow through on Friday's motion. Things are looking really good as far as that goes. And, we've got an inverted yield curve. We got a situation in China where they're locking down some important areas because of COVID. We have high inflation. We've got a Federal Reserve that's talking about really, ratcheting up in their work in terms of raising rates at a faster rate, brings up mortgage rates, slows down housing. We have all of these things going on in Russia and Ukraine that are affecting oil and metal prices, agricultural prices, et cetera. And so really what you're looking at here is that the demand was so high that even with some of these slowdowns, it's kind of starting to balance things out a little bit. But most importantly, in my opinion, about 3/4 of the motion of the stock market is having the market look forward. And so 6, 12, 18 months from now, the market is thinking things are going to be a lot better. Think about April of 2020. We're in the middle of a huge lockdown. Everything's closed. Airline miles have dropped 96%. The S&P 500 went up 13% in April of 2020. And again, the market's looking forward. The market was right. Actually, things did reopen. Earnings came back. Earnings are very, very strong compared to where they were. They're better than they were before the pandemic, for example. So that's what the market's looking at now. It's looking forward and saying, hey, these things are going to maybe resolve themselves. We're going to have a situation where supply chain gets better, demand drops down for a variety of reasons, including all of these problems, but also because the Federal Reserve, and again, we get back into more of a balance and less of a high inflationary environment. But altogether, I think the market is looking at earnings. We're about to have the first quarter earnings come out. I bet you they're going to come out to be good again. We had 7 quarters in a row where the market has outperformed expectations. I wouldn't be surprised if it wasn't 8, because the Wall Street has been overly pessimistic about a lot of the different things that are happening here. And really, those adjustments are being made on the upside with these earnings. So I still think earnings continue to do well throughout this year. And I believe that's going to drive this market forward. So anyway, things are going well, really good on a technical basis. So look forward to talking to you tomorrow. We'll see what happens then. Thank you very much.